the concept from the beginning, taking the concept from the beginning is not just fun. I won't lie to you. If you go to other academy, they might not give you the full details of what we are passing here to you in FXT4ME. Please value the little things you are getting here. They will be very, very important and very, very useful. Now, there's one thing I want you guys to understand. The major reason why I've been talking about pips calculation, points calculation, how to calculate your stop loss and take profits is majorly because of what we call risk management. Every business has its own risk. It depends on how high or how low the risk can be. Today is going to be more of conversational course, but I want everyone to understand something. And I'm going to share something to you guys tonight. I'm going to show you my chart. Thank God you are all seeing it before and you see what has happened now. All what I did is because I'm applying proper risk management. Please take note of that statement, risk management. Risk management is very, very important as a forex trader. No matter any account you are handling, just remember that risk management is very, very important. I won't lie to you guys. If you can learn how to apply risk management to anything you are doing, let's even leave forex aside. Any business you are venturing yourself into, risk management is very paramount. And the risk management is based on what you are trying to achieve. You can't just do risk management and keep on losing. No, you do risk management in order to have what? A very good risk to reward ratio. Now, let's come for an example. Let's say, for example, now, I'm not even talking about FS now. Let's divert a bit to learn something from another aspect about the world in general. Then we should bring it back to what we are doing here in the class. Now, let's say, for example, you're an importer who imports goods from China. Let's say, for example, now, goods you're buying from China are at very low rates. Is that not so? Now, there are two things involved. Is either you use air cargo or you use it by ship. Now, using it by air cargo is going to cost you more expense, but faster way to receive your goods. Then using it by ship is going to reduce the costs of you paying extra fee for air cargo and also for clearance and everything. It's going to reduce the cost, but you still receive your goods regardless of what? The duration. Now, between air cargo and ship cargo, which one will you go for? Anybody in the group? Just answer the question. Within air cargo and ship cargo, which one will you go for?
Air cargo.
Air cargo.
All right. Very good. Now, that's where I'm coming in as a risk management. Do you know that using air cargo is going to cost you more money because you are trying to do it quick to make your money fast? Doing that will make you lose a lot. The risk to reward is going to be very minimal. You look at all what you've invested and the profit you've made with the goods, because you can't make your own goods more expensive than the one in the market. You have to make it a little bit less so that they can quickly buy it from you. Is that not so? Now, the reason why I said you guys are wrong is what I just explained. Now, look at it for the shipment purpose. Now, for the shipping can take like highest of 40 to 50 days. Let's just say 45 days averagely. Now, that 45 days that it's going to take, do you know that if I should invest money, the money you use to invest, okay, let's say, for example, I'm buying goods of about maybe 3 million. Now, this 3 million goods, you've been budgeting your mind, oh, these goods I'm going to buy. Everything with the shipping and everything, with clearance and everything, I'll be spending 3 million. Now, for the air cargo, the goods you bought, everything was close to around 2.5 million. And you're going to ship it to yourself with clearance and everything is 500,000. I'm just using that for example. Do you know that you spend more like that? Oh, okay, let me just say, yeah, you spend more. Now, but you're using ship alone. When you calculated all the goods and the clearance and shipping fee is around 100,000. Then you still have opportunity of buying goods worth of 2.5 and 2.9 million. Is that not so? So who is going to make more profits within air cargo and ship now? I've break it down to you guys level so that you can understand better. So who's going to make more profits when he's about to sell?
The ship cargo.
Exactly. Now, let me now explain one thing about you guys. You guys will never understand. There are a lot of people collecting profit out there, not about using robots or anything, that they want to trade on themselves. They blow account because they are not applying proper risk management. When you are disciplined and you're applying proper risk management, bro, you will last longer in the system than someone who wants to get the money very fast. Let me quickly pass. Before you know, you blow the account. Now, someone who is using ship is patient enough. That's when we talk about patience, consistency, and what? And risk management. He has applied the proper risk management. Okay, I'm going to spend 2.9 million to buy all these goods. Then 100,000 is going to cover for shipping fee and clearance fee. Now, when the goods arrived, do you know that he can sell his own within the range of 1:4? That means, let's say, for example, each goods he bought, like, okay, this particular product now, he bought it at the rate of, I'm going to give at the rate of 2,000 naira from China. And he wants to resell it at the rate of 6,000. Do you know that he's going to see 1:3? And the way they are selling it in market, they are selling it around 7,000, 8,000. And he said he wants to sell his own around 6,000. Has he not seen more than what he used to buy that particular product? Even though he calculated the shipping fee for all the old goods of about 2.9 million, he's still going to see more profits compared to someone who used almost close to 500,000 to do shipping and everything. You can't sell at that rate of what a ship, the someone who use ship to get his goods. The rate they are going to sell is going to be different. Now, the person who ship with air, for example, now, he now wants to make sales after collecting the goods. When he calculated everything, he can't sell at the rate of 6,000. He wants to sell at the rate of maybe 7,000, 8,000. He won't be able to sell everything out. He won't sell quick compared to person who is going to sell faster. That's why I always say one statement, which my boss always tell us: be selfish to the market, but don't be greedy. How does this imply? Now let's come back to FX now. Proper risk management. Let's say, for example, this proper risk management is related to some calculation. That's why I taught you how to calculate your pips. Please, who can still remind me about the difference between pips and points? What do we use pips for and what do we use point for? So don't mind me, this is your lecture. It's a communication class. It's not about just doing everything. No, we communicate, we learn from each other. Who can remind me the difference between pips and points? What do we use point for? What do we use pip for? Hello? Are we together?
We are here, sir.
Yeah, I was asking a question. Like, who can tell me the difference between pip and points? What's the difference between them? And where are they applicable to? How do we use them? Have we all forgotten? Okay. If anybody forget, then I'm going to remind everyone. Now, at this point, I'm going to share my screen. Then we'll go to the calculator. Please follow up with me as I'm going to teach you back about pips and points. Now, once I take this back, they will now go into real risk to reward ratio. Why is this very important? How do we use it? How do we use it to get what we want in the market? The reason why we use risk to reward ratio is to shape yourself, discipline your mind, and be consistent whenever you are doing any setup in the market. Hope you can all see my screen. Now, let's start. The first thing foremost you need to understand is that 1 pip is equivalent to 10 points. I gave an assignment regarding 20 calculation based on any charts. Just calculate your stop loss to be 20 and your take profit to be 50. Only few attempt it. I'm taking record of everything. And mind you, once we are done with the introduction parts, the team is cooking something up. So get yourself ready for those who are going to win the prizes. And it's based on all the evaluation we've been doing, the assignments, the class intervention, your communication and everything. Everything is being taken note of. Don't worry, the prize will be distributed. And mind you, I want everybody to have a demo account. We'll drop a link in the group whereby you can all sign up, verify your accounts. After verifying your account, we'll guide you on how to open a demo account. And once you open a demo account, we are going to do something. Hopefully, on Monday, I'll teach you one single method about the market, what you need to do in the market. And once you can apply this, you are now becoming a full trader in the market. Now, let's start with this. Like I said in our previous class, there's difference between pips and points. Now, do you know that one single pip is equivalent to 10 points? Let's say, for example, that's the first difference. Can you get it? One pip is what? Equivalent to 10 pips. They are different. Now, whenever you're calculating for pip, let's say, for example, you're calculating 20 pip as your SL. You know that with the help of pip, you know that with the help of points, you can be able to know the amount of money you are willing to risk on that particular trade. Let's say, for example, Euro USD, you are calculating 20 pips. Let's say on a $100 account. When I taught you guys, I taught you that how do you calculate your lot size? We said this account, $100 divided by 8993. Is that not so? Are we together?
Yes, sir. Yes, sir.
Very good. Now, divided by 8933, sorry, not 8993. 8933 is going to give us what? The lot size to use. And the minimum lot size is what? 0.01. That's what it gave us there. Is that not so? I've extracted it out. Now, we said we are calculating one pip. One pip is equivalent to what? 10 points. Is that not so? Now, this 10 points now, remember, it's very simple. Open your book. If you have your book close by, then you write one pip is equals to 10 points. Then I'm calculating for 20 pips. What is it going to give us in points? It's just a very simple arithmetic. It's just going to be what? 20 times 10. So 20 times 10 is going to give us what? It's going to give us what? 200 points. Now, what will you now do with that point? That point is what you are going to use to multiply with your what? With your lot size. And our lot size there is what? 0.01 because you are dealing with what? $100 account. Now, if you now multiply it with 200 points, what's it giving us? That means you're only willing to risk $2 of the account of $100. You're only risking what? $2 in our $100 account. Now, we said what? We should always ensure to always target within what? 2.5 to 3 ratio. That means I'm willing to risk what? $2 to make what? Let's say, for example, now, okay, I'm applying 1:3. 1:3, for example. Now, what is the 1 ratio? The one there I'm talking about, that 1 ratio, that means I'm willing to risk what? 20 pips as my stop loss. So make what? Ratio 3, that means times 3 of 20 pips. It's going to give me what? 60 pips as my take profit. Am I passing something? Are you getting my point?
Please, can we come again?
Okay, let me recap. Initially, the first thing I said was that 1 pip is equivalent to 10 points. Is that not so? Now, we now want to calculate for Euro USD stop loss. We are willing to risk 20 pip. 20 what? 20 pips. Now, that 20 pips now, you write it out. Okay, how will I go about it? Okay, let me bring out my mouse. Or let me call this my cursor. You know, I'm coming. Okay. Sorry, a few minutes. This is not what I ask you to do now. I need my tools. Brush, exactly. Okay. Now let's come back here. I can use the brush on this screen here. Now let's use this brush. I'll be using it. You know, we said 1 pip. Hope you can see my screen. Is equals to what? 10 points. Is that not so? Now we are now calculating for what? 20 pips. Now what will 20 pips give us? Just cross multiply. When you cross multiply, that means what? We want to know the points. Do you get it? We don't know this guy here. So 20 times 10 is going to give us what? 20 times 10, which is equals to what? 200. And which is this 200 here? Now, this 200 we have now, we'll now multiply it with what? The lot size. Any lot size you want to use is going to tell you the amount of dollars you are willing to lose in your capital, in your balance. So if the market hits your stop loss, you won't feel it too much. It can still keep you alive in the market. Are you getting my point?
Yes.
Now, at this point here now, I'm only willing to lose what? When I multiply, that's 200. Is that not so? Now, this 200 now times 0.1 give us what? Give us this $2 here. This $2 here. 0.1 lot size times what? 200. And how did I calculate for my lot size? Based on my accounts. That's when we are talking about risk management. My account is $100 divided by this parameter here, 8933. It's going to give you what? 0.01. Now, let's say, for example, that you are using a $200 account. Sorry, let me clean this one. $200 account. Can you see my calculator? Now, on this $200 account now, what lot size can I use to enter a particular trade? Now, 200 divided by 8933. What's it showing me? It's showing me that I can use what? 0.02 lot size. Is that not so? On a particular pair. Now, this 0.02 lot size now, 0.02 lot size times, now let's say we are still using what? 20 pips stop loss. And 20 pips stop loss is equivalent to what? It's equivalent to this guy here. This guy here, this 200. That's 20 pips stop loss. It's going to give us what? 200 points. Hope you remember the calculation we did on this chart here. That give us what? 200. That's 200 points. That means I'm willing to risk what? 200 points or 20 pips. Now, you now multiply it with what? 200, which is going to give me what? $4. That means I'm only willing to risk what? $4 out of $200. Now, if you now calculate it that, okay, 200 divided by 4, what's it going to give me? That means I still have opportunity to enter the market 50 times. No matter any pair I'm trading, that means I have opportunity of entering the market how many times? 50 solid times. But you being a trader, you need to create what we call discipline. And what's the discipline all about? Discipline is all about calculating. It's not even about calculating. Zero your mind. Okay, today on this market, I don't want to risk. I am willing to risk. What's the total amount you are willing to risk? Now, let me teach you something. Okay, let's continue. Now, this $200 now, I want to enter the market. I'm willing to risk this $200. How many times do I have to risk in this market? Then you go, okay, let me try 15 days of trading. 15 days of trading simply means that you have 10 working days. 10 working days of what? Of trading. Then you divide it by 10. That means I'm willing to lose what? $20 on a single day. That means what? That's 10% of the account on a single day. So anytime I hit a drawdown, anytime I have a total loss of $20 on a single day, I'm no longer trading in the market again. You will close for the day. That's discipline. Discipline, consistency, and risk management. Those three things are very, very, very important as a trader. Very, very important. Don't ever joke with those three things. Discipline, consistency, and risk management. Those are the only things that can keep you alive in the forex market and take it as a business, not as a gambling. Then after you have these three things, then you now need a strategy to start fetching you the money. But regarding this strategy, you need to backtest it. When we say something backtest, that means practice it on a demo account. And after practicing it on a demo account very well, then if you see your performance that, okay, I can grow a $50 account, I grew it to $100 in a month. You are improving. 1, you are testing your skill. 2, you are checking on your consistency. Your consistency too also counts. And lastly, learn to be focused. The moment you are focused in the market, nothing distracting your mindset, bro, you'll be making it real time. A little can go a long way. Even if it's $1 you are making every day. Now look at the rates of dollar to naira now. Even if it's $1 every blessed day, you are still alive. It adds something. It adds meaning to the body system. It adds meaning to your life as well. Now, coming back to this place here now. Now, on a $200 account, I'm looking out, okay, in the next 10 days, there will be some times whereby you'll be having loss consistently. But a single trade or a 3 single trade on a go can cover all your losses back and fetch you extra profits. Do you believe me? Are you all with me?
Yes, we are with you.
Yes, we are.
Now, let's say, for example, now, I've calculated it that, okay, for a good solid 2 weeks, I don't want to risk more than 10% of this account. So $200 now, what are you risking? I will be risking $20 of the account every blessed day. Now, for the first 5 days, are you getting it? You are having loss throughout that week. From Monday to Friday, we are in loss consistently. No any profit at all. Do you know that you still have a life savings of $100 available in your account? Having that $100, okay, let's punch it together. Sorry, 20 times 5 will give me what's 100. Then if I should move it from 200, what's it going to give me? I still have $100 available to trade. Now, the following week, you now start trading. You are always risking what? $20. Is that not so? Now, this $20 you're now risking the following week. 20 times 3, that's 1:3. Do you get it? I'm risking 20 to make what? Times 3, which is what? $60. Now, the following week, you now make 3 days profit on a go. The first day, on Monday, you make 60. Tuesday, you make 60. Wednesday, you make another 60. Now, this 60 now, in 3 days, what have you made? You've made $180. Is it not more than the losses you've had in the previous week? You've recovered the $100 loss, then still have extra $80 on top as profits. Are you getting my point?
Yes.
Now, all what I'm trying to explain is all about risk management. It's very important. The moment you understand risk management, bro, Prophet himself go dey run for you. They'll be scared of you. Because they'll be looking like, this guy will buy account from our hand. You should have blown your account since now. Why are you still maintaining the accounts? When we started, I show you one of my accounts. I can still show you the accounts. I can still show you my Prophet accounts. Sorry. Let me show you this Prophet account. Okay, here it is. This is my Prophet account. This account, I almost blew it because what I target is 10% of the account. That means I'm only risking, I'm actually risking within $30 to $50 every blessed day. But the overall drawdown is $250. Are you with me? The overall drawdown on this account is $250. Now, when I now sit down and I calculated that, okay, I'm going to use this one to explain so everybody will understand what we call risk management. I collected this account around middle of January. That's when I collected this account. But mind you, I'm always busy. I don't always have time. Anytime I have time to trade, I enter the market, I trade, and I walk away. Now, mind you, I'll show you my record as at last week. And today, I make profit and I lose everything back. I was at break even to me. I see it as break even. I did not lose more than what I'm expected to lose. Now let's look at it together. Now I'm giving a $5,000 account. Then I tell you that your daily drawdown, that means your daily loss must not exceed $250. Hope you understand that statement by $250. What does $250 mean? It simply means that the account given to you is $250. Because the moment you have $250 loss, the account is gone. So it's not left for you to now leverage yourself, to now calculate yourself that, this $250 account now, how will I be in that market until I pass, then collect maybe the second phase or the live account? Please, hope you understand what I'm trying to tell you.
Yes, sir.
Now, this is it. On a 5K account, they say my daily drawdown is 5%. Now, that 5% is 250. Now, this 250 now, you now calculate it that, okay, this 250, how many days? To me, I won't lie to you, I always calculate 10 working days. I always calculate 10 working days because that's the leverage I can give myself that, okay, for a whole week, I know sometimes I may have losses consistently. Then the following week, surely I will recover all those losses. It's not about mouth. It's about how you train your mind, how you train your brain, how you train yourself. Consistency matters. Now, on this 250 account now, divided by 10, let's go back to our calculator. You see what I'm telling you now. 250 divided by 10. That means I'm expected to risk what? $25 every blessed day. Are you getting my point? I'm expected to risk what? $25 every blessed day. For me, I actually calculated my own to be 5 days. I calculated it to be 5 days. That means I'm only risking $50 every blessed day. $50 every blessed day. The first day of trading, I hit a drawdown of $60. I'm not lying to you. I can show you record. I hit a drawdown of $60. The second day, I hit another drawdown of $60, making $120. I sat down. I was like, why is market always trapping me? But this setup is very okay. Why is it that after kicking me out, it will now go my direction? And I said, okay, fine. I know what to do. The third day, and I said, let me go a little bit aggressive. The market deal with me, like big time deal with me. And it was even doing when there was this thing. I never knew news is going to come out. I've forgotten that there's even something called fundamental self. My mind didn't even go to fundamental news. There was one news, but the news is not really popular, but it took a very lengthy price in the market because of the previous to the actual. It's very, very wide. The gap is very wide. So the markets push me out a lot. And it's not only one position. I opened like 3 markets running, but because all of them are all based on USD, the market kicked me out. In total, I was now having a total loss of $210 loss. I was not like, but should. Throughout that week, I never entered markets again. The following week, I now calm myself down and I started trading. And I have to recalculate myself that, okay, I don't want to risk more than $25 of my account. Of $250, do you get it? And I started using 25. With that 25 I'm using, this is what I later end up with. You can see today now, I have a total loss of what? 11. You can see I've made profit already. I first had loss. I've made the profit already. Then entering the market back, boom, I enter loss back again. I just lock up. Now that's for today. Now look at my last week record. You can see I grew the account back to 5,000. Then I'm growing it gradually, up to this present moment. Are you seeing what I'm telling you now? It's all about, you can see what I'm doing. Risk management, 0.3, 0.03, 0.05, 0.03. Where did you see where I use 0.1? Do you see anywhere I use 0.1? Highest you see is 0.08. It's because that place is an untethered zone based on my setup.
0.1. Okay.
This guy. This 0.08 is because what? I even opened one position. Normally, I wanted to open 2 positions of 0.04 in 2. I just said, let me just open 1. because that zone is very untested. The market came there the first time, did not tap it. Very small, just 1 pip difference. He went. He came back again the second time with another 1 pip difference again. The third time like this, he just picked me up and it's almost my take profit. I was not like, okay, let me close. I said, well, let me just close, Jerry. And my take profit is just 60. I'll just say $60 instead of $55. You hope you guys are getting my point. It's all about risk management. Apply proper risk management. It's not about you using biggest loss size. And remind you, this is just a weak trade. A weak trade is giving me this. Just come to think of it. You having a $200 account, using loss size of 0.2 and 0.02, it will take you a long way. Like you make a lot in the market. You make a lot. If not for these losses I had back, I've made about $24 profit today, and I lose everything back. Then I lock up, not entering the market again. Hope you guys are getting my point now. It's all about proper risk management. Now, look at these other accounts here now. You can see, as of today now, you can see what I make for today. I lock up. I've had a lot of losses because I only set limit down. I went to school. I don't even check anything. Coming back, I just see stop loss back. Throughout yesterday and last 2 days ago. So I just calm down that I don't have any class. Let me settle down and enter this trade. And I caught the trade, fetch me $11. I lock up. I never enter the market. I didn't even open it again. So all these things is based on what? Discipline, consistency, and proper risk management. Please, I don't know if you guys are getting what I'm trying to explain to you guys.
Yes, sir, we are following.
So that's one thing about risk management. Now let's go to my charts that I'm talking about regarding that Euro USD. Sorry, it's loading. This GPP and this GU, you can see GU even break TP safe. In break TP. Come back again. Now it's going back again. The main one I want to show is Euro USD. Now you can see what I'm talking. You can see, look at this point here now. If I should extend it now, you see that it's still that same zone where I want the market to come to based on my order block. My hand has adjusted a bit. That's why I don't like using phone to do setup. Okay, now it's accurate now. Now let me rotate it for you. Let me rotate the screen so you can all see the full screen, not half. Now this is it. If you notice in my chart here, this is what I've been doing. Let me put it in full screen so you can all see it. You can see what I'm doing in the market. Just about what? This 0 years I'm talking about. You can see what the market did. It tapped the first time. It did not pick me because of what? Spread. Hope you guys now remember the calculation of spread regarding ask price and bid price. Spread did not allow the market to tap me in. It went. Come back the second time. It went a little bit. Then now come back the third time to now pick me up. Then it's my TP. Then went up again to tap my second supply zone. The top there. Let me use this thing so you guys will understand. The market ignore me here because of spread. Come back the second time, ignore me. Then the third one triggered. When this third one triggered, I caught this sell here down to this point. This is my fail to return level. Then the market tapped me in. When it was dancing around this level, I just closed. Then later it's my TP. Then come back to my supply zone. And I wasn't online. I wasn't online because my phone was off throughout. Coming online when in the afternoon was doing the news, which I traded the news, gave me a small profit then. Gold collected everything back from me. So this is how the market works. There's nothing. You can see all these ones. Everything was eating TP back to back. So all what I just want you to understand is that it's based on proper risk management. Now look at it now. Once I click on the screen, what are you going to see? This is what I want you guys to notice. You can see, hey, shut, not there. Oh. Okay, let me go this way. What do you notice around this level here? It's telling me that this point here, this red box here, is my stop loss of what? 19 pips. Then the point is what? 190. Can you see the 190 at the back? Now, this 190 now times any lot size you are using, it will tell you the amount of dollar you are willing to lose. Are you getting my point?
Yes, sir.
Sorry, sir. Please come again.
Okay, I'll come back. You can see this red bus here. The distance between this line here to this red bus, this entire red bus here is what? Is this 19 pips here. You can see where they write 19 in the center here, where this arrow is pointing to. This line here, that 19 pips. Can you see it? That's the amount I'm willing to risk. 19 pips. Are you getting this? Then at the back where they write this stop loss of 190, that's 190 points. You can see that 19 pips times 10 is going to give us what? 190 points. So this 190 point now times any amount of lot size you are using, either is 0.1, either is 0.01, either is anything you are trying to use it with. Now, if I'm using 0.1, that means I'm only risking what? $1.9. Are you getting my point? I'm only risking what? $1.9 to make a profit of what? What's there? 7.8. Because this is my take profits. This is the pips. This is the points here. Sorry. This is the points. This is the PP here, which is this 78. I need to adjust this thing away. It's disturbing. Hope you are getting it now. So this is the amount I'm willing to risk. The lot size I'm willing to risk. Sorry, the pips I'm willing to risk, which is 19 pips, to make a profit of what? 78. Now, this 78 now, this 78 you are seeing here, that's my profit target. But how do you know, how will you know the exact risk to reward ratio? This is it at the center here. You can see where the right risk/reward ratio is what? 4.11. That means 78 divided by what? 19 will give us what? 4.11. Are we together?
Yes,
Put
sir.
it on your calculator. 78 divided by 19 is going to give us what? 4.11. That means I'm risking 19 pips to make what? 78 pip. Which simply means what? Okay, let's say, for example, I'm using 0.1 lot size. I note every calculation in my brain. Now, if I'm using 0.1 lot size, that means I'm only risking what? $19 to make what? $78 profit. $19 as my stop loss to make what? $78 profit. Are we getting the point?
Okay,
Yes,
sir.
Yes, sir.
yes, sir.
Very good. Now let's look at another one. Look at this one here. What do you see? You will notice something here. This one is even more clearer. Now you can see here now. What am I risking? I'm only risking what? 20 pips.
Pips.
20 pips. Is that not so? To make what? 64.4. Now this 64.4 divided by 20.9, what is it going to? Is this the risk to reward here? Which is what? 3.08 risk to reward ratio. Now let's say, for example, now I'm using 0.1, not 0.01. Okay, let's use 0.01 for example now. For that of 0.01, it simply means what? I'm risking how many? This is 209, meaning that I'm only risking $2.09. $2.09. Do you get it? $2.09, which means what? $2.09. That's what I'm only risking in my account. To make a profit of what? To make a profit of $6.44. That means 6.44 cents, which is 0.01 on a $100 account. Are you getting my point?
Yes, sir.
Yeah, it's very
That's
clear.
very good. Very, very clear. That's very good. So that's how it works. There's no any magic in markets. It's just that the greediness of people and the impatience for them waiting for their setup to trigger. If you are impatient in the market will be eating to you. The market will just be eating you up, and the broker, you are feeding the brokers. You are feeding the brokers. Instead of you making money from the market, you are feeding the brokers because of what? Impatience. It's just like the example of someone who is using cargo to ship goods and someone who is using ship to receive cargoes. You using ship, you make more profits than person using air cargo. That's how the market is. Patience matters a lot. Consistency also counts. Then discipline is just the key. It's just the father of everything. Then you focus on what you are doing. That's what I always ensure. I always tell everyone, don't look out for too much of peers. You can focus on only one peer and maximum of 3. Focus on it. Build yourself on it. Practice with it. Go to demo. Even though you don't know how to analyze market, just observe how the market is moving. If it's the trend you want to study the trend. Are we getting everything? So that's how it works. That's how it works. No magic. No magic in the market. That's how everything works. There's no any magic. Please, if you have questions, you can proceed, please. If you have questions, please come up with your question.
All right, good evening, sir.
Yeah, good evening, sir.
All right, so when you want to reach 1% of your capital, you're not
Okay.
supposed to calculate that by the by just guessing any pip now, by just guessing any lot, right?
Okay.
The calculation for 1% of your capital is what I want to know. Like
Okay,
if
very
I'm
good.
trading with like you mentioned that your prop account has 250 drawdown in a day. So
Yes.
I want to know the let's say you want to be risking just 1% a day. You know, the calculation you gave us is based on the lots you can use, but not how you can get the risks for that particular amount.
Okay. Now let me
Yes.
explain that to you. Let me explain it using this place here. Let me claim this ones here. Now, let's say for example, the first thing foremost, what I explained was based on profile. Now let's explain based on a live account now. A live account. So what account lot size are you looking up for? So I can use it to
Let's look at let's use $1,000.
okay, very good. $1,000 account. Now on this $1,000 account, the first thing foremost, like I said, risking 1% of your account, just multiply it by what? 1% is going to show you $10. That means you're only risking $10. And mind you, when they say risk only 1% of your account, they are telling you that you should risk only 1% of your account on a particular pair. That's what they are telling you. Risk 1% of your account on a particular pair that you are entering. Just risk only 1% of it. You know, you can have different pairs, USJPY, Euro USD, GPP JPY. There are many pairs. But when they say risk 1% of your account on a single pair, that means just punch it. That means my stop loss is going to be calculated based on what? On this $10 that I'm only going to risk on that pair. Please, hope you understand what I just explained.
Yes.
Now, let's look at it that, okay, that's why I said you need to know your trading plan very well and what you are planning to risk. Now, on this $10 now, you now calculate it. Okay, this $10 I'm about to risk on a particular pair. What loss size can I use to risk $10 on a particular pair? Then it's not left for you as a trader to calculate. Am I to use 0.01 or 0.02 or 0.05? Now, from this point here now, you now go to your charts. For example, you go to your charts. Now, on my chart here now, 1 pip is related to 10 points. Is that not so? Hello, are you there?
Yes, I'm with you.
Now, from this $10 you are risking, you now divide it by the amount of pips you are willing to risk on that particular pair. It will tell you the loss size you are using. Now, let's say, for example, now I'm risking only 15 pips. Is that not so? 15 pips simply means what? 150 pips. Can you see what it's showing us?
Okay. Yes. So
You'll be
this
able
is
to
how.
know the
So if you
amount of
enter
lot
with
size to use.
0.06 for 10 pips,
No, for 15 pips,
okay, for 15 pips, okay,
which is that 150
0.06.
point. You get it?
Yes.
But what we initially calculated was 1% of the accounts in dollars. And 1% of $1,000 account is going to give you what? It's going to give you $10.
Okay.
Now,
Okay.
this $10 now, how am I going to calculate to know the lot size to use so that I won't risk too much more than the $10 I'm actually willing to lose? That it won't pay me if I lose this $10 on a $1,000 account. Then you now calculate based on your what? Based on your stop loss. Now, my stop loss says what? 15 pips. But I now remember that 1 pip is related to what? 10 points. Then with the aid of points, I can know the amount of lot size to use. Because when you multiply points and lot size, it will give you the amount of dollar you are trying to lose. Is that not so? Then you do the reverse decay. Let me show you the reverse decays. Let me bring out the pencil. Now, remember, we said 1 pip is equals to what? 10 points. Now, at this point here now, I'm willing to lose what? 15 pips. Don't mind I'm using ordinary P, so you understand that it's P. Is equal to what? 150 points. Is that not so?
Yes.
That's the lot size I'm willing to lose. You get it? Now, to calculate for this thing here, to know the lot size, you say what? Lot size, we don't know the lot size. Lot size times the 150 points is equals to what? $10. Are we together?
Sorry,
Lot
sir.
size
You
times
said
points.
lot size.
Yes,
Lot
lot
size
size times
times
the
points.
point will give you the amount of dollar you are willing to lose. But now we've calculated that we are only risking 1% of the account. And 1% of the account is what? $10. Is that not so?
Yes.
Now we've known the $10, which that's why I said what? Lot size is unknown. Then 150 points. Lot size times 150 points will give me the amount of money I'm willing to lose. And initially I planned that I don't want to lose more than what? $10 on Euro USD alone on a single pair. Are we together?
Yes.
Do you get the logic now?
Yes. So I have to use the lot times the points to get the dollar.
To get the dollar, exactly. Now we've known the dollar we are expecting to. If it is that we don't know the dollar now, that's when we'll now be saying, okay, what lot size should I use? What you get? But initially, you know that okay, I'm only risking 1%, and 1% of $1,000 is what? It's $10. So this is my $10 at the front. Then what are you going to do? You only divide all through by what? 150. Divide here two by what? 150. 150 cancel 150. Then what lot size will I have? Which is going to give me what? 0.06.
6. Okay, great. And so if I want to also, if to calculate the, let's say the take profit is 30 pips, that's 300 points.
Exactly.
Okay, great. Thank you.
And at this point here now, we are having what? We are using 15 pips. Now, 15 pips times, if you are using ratio 3, for example now, times 3, is going to give us what? 45 points. 45 pips. Remember, 1:3 is going to give us what? 45 pips, which simply means what? 450 points. You get it? Now, if you now multiply this 0.06 lot size, 0.06 times 450 points, whatever it gives you, that's the amount of money you'll be making. Now let's punch it together. Sorry, I've cleaned it. So we calculated for 1:5. 1:3. That means 450. Sorry. We've known the lot size already. Do you get it? Now 450 times the lot size, which is 0.06. Is that not so?
Yes.
What's it going to give you? 27. So that means you're only risking $10 to make $27 profit. Please, am I clear? Do you understand that aspect now?
Yes, boss.
Yeah, very good. Please, any other person wants to ask this question, please, straight up. Before my phone goes down, I'm having less than 6%. Please bring up your question. If you don't understand anything, please. Risk management is very, very important. It's a course on its own. And what I just did now, I've summarized this like almost 3 topics together. Normally, if I'm to do it, I'll just take, firstly, you need to understand consistency. I'll teach you consistency throughout today. Then the next time we meet again, we'll take, I mentioned 3, consistency, patience, then proper risk management. I'll take proper risk management, complete day. Then the next day again, and the next time we meet again, I'll take the last part. After taking those ones, then I'll now combine everything and teach you this calculation. But to make it more easier for everyone, that's why I'm making it like this. We are still going to talk about it one more time, because this is the major thing you need to understand about the market before learning strategy. This is very, very paramount. Anybody trading, calling himself a trader without proper risk management, bro, that's not a trader, it's a gambler. You don't have proper risk management, you are just entering the market anyhow without no strategy or setup, and you call yourself a trader. You're having a $100 account, you're using 0.2. When you're not a professional trader, just say they play. You go do giveaway tire. So that's it. Please, if you have any other question, please share it. Hello, are we all there?
Yeah,
Yeah, good evening.
Yeah, good evening, sir.
Yeah. Okay, I've been with the classes and I understand the facts of your explanation that you've been on since the pips and the points. I understand the aspects now.
Okay.
So, but my question is, this thing is a platform, and all those drawing that you are showing us, I couldn't grab the explanation very well.
Honestly,
Just like
I told
you are
everyone
performing magic. So I don't know if there will be another event.
hello,
Hello.
we can hear you very well.
Okay, would there be any avenue to take on the chart very well, like to be
Sure,
more
there will surely
explanatory?
be an avenue for showing chart. That's why I said you guys need your MT4, MT5, and trading view on your phone.
Okay,
And
You
demo
need it.
account.
You get it. You need it on your phone.
okay.
As a
I
trader,
thought
those
you
things are very
mentioned earlier
powerful.
that you take us on demo accounts on Monday.
Yes, did I say Monday? I said I'm going
Yes,
to
you
take
said
you guys on a demo journey. Which yes, on Monday. This weekend
yes,
already. Okay,
yes.
Monday. Okay, you know what? The thing we'll talk in the team, the committee will talk, then we'll get back to everyone in the group chat regarding the aspects and how to
Okay,
go about it. And also we'll drop a link whereby you can all register, a secure broker where you can all register and create a demo account.
okay. My other question again is
Okay.
it not possible not to make loss at all? Is it not?
Well, in the markets, you are not the market maker, or what do they call it? Losses are inevitable. You can never avoid losses. Even me, as a pro trader, I also
Okay.
acquire losses in the trade. Thank God you saw my today's trade.
Yes,
I've made
yes,
a lot of
yes, we did.
initially, and I lost everything back. The moment I lost everything, I lost extra $11 because I've calculated it as okay, 24 plus 11. That means I've hit my daily drawdown, which is 33. I'm okay. I'm no more trading. I'm okay. So we meet next week again.
Okay. All right. All right. Thank
Yeah,
you for your time.
you're welcome.
Yes, sir.
Thank you, sir. Mr. Please, I want to ask, is this your first class?
Yes. Yes, this is
Oh,
my first class.
You've not watched our previous section.
You said?
I said you've not watched our previous section.
No. I was directed to the YouTube channel to see some